Exela Technology stock seems to be going on a dramatic rebound at the moment, which could be a further sign that a potential short squeeze play is building.
All right, everybody, there has been a lot of name calling against our office today, corporate maligning, slurring, much of it coming from one of you who claims that prison is better than here.
Hi again, everyone. I hope you're all doing really well. So it has been a dramatic couple of trading days for Exela Technology's ticker symbol XELA since my last update. And perhaps as we speculated around, we may indeed see a short squeeze rally mounting for the severely beaten down business process automation firm. In the past 2 days, the stock has mounted a 35% rebound, closing Thursday's session at $1.67. Other than us further speculating on a short squeeze, it is also worth pausing and acknowledging that the stock seems to now be in a far healthier position to survive the possible Nasdaq delisting, which has been hanging over the company and was seemingly coming to a head this week, as the stock price did its best to remain above the dollar per share mark. Now, moving on, there was some positive news from the company in the form of creating a new LLC to hold assets to help bring value back to the share price. This is going to be started with the purchase of $70 million of their own discounted notes, which will be purchased at a discount, like I just said. This will reduce the book value of debt the company has in principle, but from an accounting point of view, it just means they are paying the interest coupons that these notes would have otherwise attracted. And when the notes mature in 2026, they would likely transfer the face value of those notes back to the main Exela Technologies accounting entity. So unless they update their accounting practices, this won't affect their books until 2026, other than the equity raise to cover these costs. Anyway, while this was a positive step for the company in terms of repairing their capital position, what really seems to be driving current interest in the stock is the short squeeze interest.
And none of us can say boo, because none of us have ever been to prison. Well, there's somebody I'd like you to meet. Somebody else who has been to prison, who can tell you what it is really like. I'm Prison Mike. You know why they call me Prison Mike?
Do you really expect us to believe you're somebody else?
Do you really expect me to not push you up against the wall, biatch?
So in terms of the short squeeze credentials, from the lows of Tuesday, the stock has rallied back up above the $1.50 mark, which I think will mean we will see some shorts start to cover, particularly those that were in the play, hoping to push the stock to a point of delisting, or at least a second warning over the delisting. As I was speculating before, I believe for a truly strong short squeeze rally to occur, we need to see the stock push back above the $2.91 mark, the price point equivalent of where the stock was trading pre-reverse stock split last week, which is indicated by this yellow line. I have added this red box into our chart to give some indication of where there are distressed short positions at the moment. It doesn't capture anything pre-reverse stock split, but again, the equivalent share price is the yellow line. So if we can have a bit of a run from the stock on Friday, we might be getting within touching distance of this mark. Now, to be honest, there is still plenty of firepower for this stock in terms of a prospective short squeeze. According to Fintel, 80% of the float is currently held in short positions. There is still an average of 2.7 days to cover, and the borrow fee is still quite low at 5.72%. But the price holding or even increasing into the weekend could mean we start to see a number of short positions start to cover, which would drive these figures up if they do not do so already. And it's also worth keeping in mind that this stock has a tiny market cap, so the retail side being able to take control of it in a short squeeze play is actually somewhat realistic. Currently, Exela has broken back into the top 100 most talked about stocks, coming in at number 87, which could be a sign that there is actually indeed an increased interest from the retail scene. This latest rally has been perhaps further spurred on by greener times for the broader tech sector, with a number of large tech firms reporting better than expected results recently, which has helped spur on the Nasdaq index at large, which obviously includes Exela. Anyway, I'm just glad the company has seemingly gotten out of the woodwork regarding the delisting threat from the Nasdaq for now. A further boost in the share price is much welcomed. However, it is worth pointing out that the stock is still only trading at about 8.2 cents per share in terms of its pre-reverse stock split values. So all intents and purposes, it is still very beaten down when you look beyond its recently manipulated price. Well, I will leave it at that. We are seeing a very interesting trading period for the stock at the moment, and there could be much more excitement still to come. What are your thoughts? Where is this all heading? Are we going to see a short squeeze rally, or are we going to see a bit of a capitulation following the recent gains again? Or, dare I say it, some normalization in trading patterns from Exela Technologies? Let me know your thoughts in the comments below. Until next time, everyone, may the markets trade in your favor. Cheers.
Biatch!